Hey there, happy Monday traders. New week, new tape. So we've got yields with inflection levels, gold still wearing the hedge crown, and rotation quietly resorting winners and laggards. Today I'm going to break down the overnight read, what Friday's tape taught us, the macro levers that matter right now, where money is rotating, and 3 clean trade setups you can hit at the open. So then traders, let's get into it. Firstly, our overnight and futures pulse. The futures all sitting modestly green before the open on Monday. The Dow sitting at $46,190.61. Nasdaq $24,817.95. The Russell sitting at $2,471 and the S&P 500 at $6,664. Asia to Europe handoff, tech is steady, defensives were bid and cyclicals were selective. Dollar and rates, the dollar soft at the edges, 10-year yields are hovering, still the market's metronome. Talking about commodities now traders, gold is firm, hedge flows are intact, sitting around all-time highs around just under $4,300 an ounce. Crude is choppy to softer. So it's a constructive tone, but the first 15 to 30 minutes will decide conviction. Okay, traders, our tape recap, essentially our lessons for Friday. Dips in quality tech and semis were bought near obvious levels. Leaders didn't crack. Defensives like staples and healthcare provided ballast when growth paused. Energy and materials lagged. Discretionary was split. Premium brands held, but weak margins faded. And lastly, volume was decent. Not euphoric, it was an accumulation vibe. Certainly not mania, traders. The lesson was that the tape still rewards structure, confirmation over blind chasing. Structure and confirmation together, far better strategy than simply blind chasing. I'm sure we would all agree. Macro levers, why we could move today. Well, rates are the referee. At 10-year drift lower gives air to growth and semis. A pop rotates flows into defensives and cash flow names. But patience is key, traders, like we always say. Inflation undercurrents, services, wages and imports costs remain sticky. Any hot whisper can jerk flows intraday. Positioning, managers lean long. Cash light, upside can extend and downside air pockets can be sharp. Cross assets, softer dollar helps multinationals. Gold's firmness says institutions still want a seatbelt. Crude indecision keeps energy tactical. Breath tell, if small and mid caps join early, trend odds rise. If they don't, expect rotation and chop. Taking a look at rotation and flow map, some of the news that we're seeing this week. AI semis equipment, leadership rotates beneath the surface. Equipment often catch the bid when headline AI cools. Staples and healthcare, quiet leadership on wobbles, pricing power, clean balance sheets. Then selective consumer, premium and necessity names attract steady bids. Highly promotional, low margin names remain fragile, traders. And industrials and transports show up when growth hopes perk up, need breadth and yields to cooperate. Lastly, energy and materials, still two-sided. Traders look for catalysts before leaning. Now, let's jump into trading view and take a look at 3 actionable trade setups going into the open on Monday. The first is KLA Corp, ticker symbol KLAC, and this is our equipment pulse for AI capacity. Why? Well, when AI excitement rotates away from marquee chip names, equipment often becomes the cleaner expression traders. Long, if KLAC opens green and holds the first push above pre-market high with a VWAP retest that sticks. Bonus, if a semi ETF is firm. Fade alternative, spike. Then immediate VWAP fail in the first 15 minutes equals short back into weakness. Scale and risk, scale into the first $2 to $4 push, trail runners under higher lows, and invalidate on loss of VWAP and sector rolling over. Combination of the two. Alright then, our second actionable trade setup is target. ticker symbol TGT. And this is the selective consumer rebid. Why? Well, with discretionary split, big box names with improving traffic and mix can catch steady bids when consumer tape stabilizes. Alright traders, action. Long on a steady green open while retail ETFs are positive. Prefer a grind up over a rip. Add on a calm, higher low reclaim if the first pullback holds above VWAP. And traders, for scale and risk, take $1 to $2 clips into strength. Keep a small runner if XRT stays firm. And invalidate on VWAP loss with retail group turning red. Alright traders, lastly, we're taking a look at Johnson & Johnson, ticker symbol JNJ. Why? Well, healthcare has been quiet leadership lately. J&J offers low beta stability plus pipeline cash flow. Great ballast if rates pop and growth wobbles. So then traders, what's the move? Well, let's long on a clean green open with XLV confirming, or buy the VWAP reclaim after an orderly dip. Then for scale and risk, trim into 80 cent to $1.50 pushes. Keep a small runner if healthcare breadth improves. Invalidate on sector fade and loss of morning structure, traders. Alrighty then. Our execution filters. Let's decide fast and manage risk, traders. That's our theme today. Futures versus VWAP. First ES NQ VWAP test is the truth serum. Hold, then press winners. Fail, then tighten risk. Breath by 10 a.m. Eastern Time. Wide participation means trend odds are up. Narrow means rotation and chop. Trade smaller and quicker. Liquidity magnets, traders opening range high-low, first 5 to 15 minutes, and then yesterday's high-low and pre-market extremes. Volume is greater than opinion. If volume doesn't show, treat moves as guilty until proven innocent, traders. You know the drill by now. Alrighty then. Too long didn't read. Going into Monday, rates call the tune. Gold keeps the seatbelt buckled and rotation is selective. KLAC for equipment momentum, TGT for selective consumer strength, and J&J for healthcare ballast. Trade confirmation, not hope. Let's be patient and also trim into strength on an exit and let the first 30 to 60 minutes tell you who's really in control. Alrighty traders, see you at the bell. Let's execute.